CNBC TV 18 Weekender.
Hello and welcome to a very special episode of The Weekender on CNBC TV 18. Our guest today, the MD CEO of Marico, the company that makes ubiquitous products which are everywhere in India, the very familiar blue parachute bottles and the very familiar yellow Saffola kegs. Mr. Saugata, thanks a lot for joining us.
Yeah, thanks for having me here on the show.
First up, if we look at your career, you started off with Cadbury's, then you went to selling life insurance and then the healthy oils. That was quite a healthy career graph if I see,
Yeah, I think it's interesting. You're right. I think, and when you are young, I think chocolates is the most exciting. You grew up in a Cadbury world and therefore it was a very exciting category to work with. I think it was a great learning for as far as this career in Cadbury was concerned. I think I ventured out into something different as life insurance. I think that was a sector opening up. ICICI, I think, is a very exciting place to work. I think in terms of leadership development, those 3 years I spent, I learned a lot. But later I realized my calling was FMCG, and this is something which I loved. And this was an organization with great brands, great prospects of growth. I think I could make a difference here, and I came back, and ever since then there has been no looking back.
And difference you have made. So Marico is your calling for the longest term now?
Yes, it's just been after Cadbury. I crossed it last year, yeah.
All right. Okay, so Marico, as a company, has been a company of firsts. It was the first one to package coconut oil in plastic bottles. It's the first company to package or market healthy oils at the same time. Also financially, the first company to report quarterly dividends. So what is the set of firsts that you're working on right now which will take the company to its next level?
What we have identified for ourselves is that there are 5 areas where we want to be top quartile, and if we do that, results will automatically follow rather than just chasing some numbers. So we've identified 5 things: innovation, number 2 is go-to-market, third is cost management or value management, fourth is our talent and culture, and the fifth is IT, analytics and the digital world. And all these 5, we have now got a roadmap for the next 4-5 years.
Can you tell us, 5 years from now, what would Marico's revenue mix look like? How much proportion would come from Parachute? How much from Saffola? How much from value-added hair oils? And how much from the foods business?
So instead of giving you a number, let me give you a flavor of it. I think the Parachute dependence is, we are now less than 35. It was 52% a couple of years ago. I see a far more value-added premium business. At the same time, I think there is enough opportunity bottom of pyramid. Rural contribution is still low. And I think there will be far more meaningful male grooming business. We believe that we are leaders in some of the categories and there's enough opportunity to grow because most of the categories are low penetration. And there will be a critical mass of foods business. I can see a foods business anything between 300 to 500 crores in the next 4 to 5 years.
So that's still just 10% of your revenue. That brings us to the question that Marico, eventually, will it just be a company where majority of the revenues comes from oil, be it hair or edible or even value added? Hair oil, are you planning to go into any other segment rather than oils per se?
So the way we look at hair, I think, is nourishment rather than oil. And I think sometime as we premiumize, it will become format agnostic. If you really look at, I think the challenge that we face in some of the cases is that there is an issue in which people lapse out of the category. They re-enter the category when there's a problem. For example, there's hair fall or this one. So our endeavor is to ensure that how do you deliver the same nourishment in a modern contemporary format. And globally, for example, there is a move back into nourishment. So there could be things like a serum oil, which is nothing but which is a continuum of an oil. It could be a cream, it could be something. But I think the challenge is to premiumize and give formats which deliver the same kind of a nourishment.
Can you tell me how much of your revenue then will come from the super premium, and regular commoditized products?
So as long as I think what I call the core new and new. The core new could be a premiumization of hair nourishment, it would be premiumization of even edible oil. We don't operate
Exactly,
in the real
yeah.
super premium part of it, the entire male grooming segment, so what we already have, and I see a sizable 20-25% business coming from that.
And that would be margins of?
See, again, the way to look at it is, I think if we make a margin in the Indian business of 20% plus, we are happy with this margin. Our entire endeavor will be to maximize growth and market share. Other than foods obviously has a lower margin, but the blended new products or the new core, as I call it, will have certainly a slightly better margin gross level than the current core. But I think it needs a far significant investment. So I will be happy if the organization blended margin continues to be staying at around 18% with the India business at around 20%.
All right. So in that case, where will your international versus India business look at in the next 5 years?
I think we should deliver minimum, I think, constant currency growth of 15% in the international business in the next 4-5 years. The good thing about the international business is there has been a significant uplift of the operating margin. It was 9 to 10. Around 3 years ago, it is around 16 to 17. I think 16, 17 is here to stay.
You have 830 crores of cash on your books. You said you are looking out for acquisitions. Which one? I mean, which space, which country? When can we hear about an acquisition?
I think there are a lot of learning. So we will be much more, I think, careful about acquisitions. The 2-3 biggest learning has been it's better to take a strong brand, not to take a weak brand. A strong brand badly managed is better than buying a weak brand.
So which is the strong brand which is badly managed right now, which is Marico is eyeing that right now?
Right now, I mean, it's very difficult, as I said, to,
Will it be India or international? Where will it be?
India, again, there are very few opportunities available. I think it's very crowded. I think international, we are interested in if there are opportunities it could be bolt-on opportunities, existing market to get scale, or the two other markets which we are interested in is Southeast Asia and East Africa, where we believe that organic, a mixture of organic and inorganic will give us scale fast.
Are you guys in talks with someone right now?
Not really.
Okay, fine. Hang on to that thought. We'll take a short break, come back, and we'll continue our conversation with Saugata Gupta.
CNBC TV 18 Weekender.